Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Let's take a look again on the euro currency. So you can see that the moment that we have discussed yesterday, that market could show the bounce up from the support area and the target of the, if we could call it the free drive patron's final support has happened, because European Central Bank comments were a bit less dovish than market expects, and the Draghi hasn't given any comment on starting of the quantitative easing program. Let's start immediately or something of that sort, and that's why you can see that reaction was relatively mild, and market even has jumped up. So those who have taken the position on the possible more dovishness from the European Central Bank have to close these positions, and that has led to some upside retracement. But mostly the situation is still a bit uncertain, because today we will get the non-farm payrolls release. Reuters poll expects to get 230,000 new job created, and that's just a beacon for you. So if we will get some numbers and exceeded that 230, we probably could get reversal to the downside, breakout of the support, and direct action right to the 122 on the next week. If numbers will be worse, in this case we probably could count on the deeper retracement, and maybe this free drive pattern really could work, because it's not really big room till the 126 area, the minimum target of the free drive. And if non-farm payrolls release, the non-farm payrolls data will be weak, in this case I can't exclude that really could show some deeper retracement. Why not? Especially because we have the significant support area here. That's reversal pattern. To be honest, guys, if we wouldn't get today the non-farm payrolls release, in other circumstances, maybe I would try to take the long position based on the current picture, because it really looks very nice. We have the falling wedge pattern. I will not be surprised if even we will get here also the divergence with the MACD. Just let's check this out. Okay, so right, so take a look that we also have the very nice looking divergence. That's very common. It's just perfect picture from the even theoretical point of view, or technical perfectly. We have bullish divergence with the falling wedge pattern. That is also the completion of the couple of the butterflies. The three drive pattern takes the shape of the side-by-side butterflies, just the perfect picture. But the one complicated factor here, that is the non-farm payrolls release. So really good data will probably push market lower, and will not be surprised the market will fail here and continue move lower. But as I said, if we wouldn't get the non-farm payrolls release, I probably right now would start to search chances to taking the long, based on this bullish engulfing pattern that has been formed right at the completion point of the three drive. So it's just absolutely perfect picture. But as I said, non-farm payrolls will clarify everything. On the 4-hour time frame chart, we have nice bounce up. That, guys, by the way, was the perfectly looking bread and butter sell. Market has reached the confidence resistance, or better to say, market has reached the major 50% level. I don't have it on this chart, but you know that the euro currency likes the 50% retracements, and that was the 124.50, the 50% resistance. Market has hit it with 1, 2 on the third candle above the 3x3, very deep bread and butter, return right back down and hit the target at the same hour. On the next candle, you can see hit the resistance. This was really a fast bread and butter. So right now, at the current moment, guys, I do not see much that could be done immediately right now, because we do not have any clear patterns. We do not have any other setup since bread and butter already has been done. Also take a look that this was a really perfect harmonic swing. So this line is cloned line of this retracement. I just drag it here and drop here. So you can see that's the same retracement has happened as here. So right now we just, all that we could do is just to wait, because I don't think that taking the position right now will be a very good idea. That just will be safer to wait the numbers from the NFP. So if that data will be positive, it's probably engulfing pattern will be vanished, and in this case we could try to take the short position on some minor retracement, because in this case it's really big chance that market will continue move lower. If non-farm payrolls data will be weak, it's really pretty room till the 126, and probably we will have a lot of time and room to take in the position on some retracement. So the market will start to accelerate higher, probably could get some minor retracement where we could take the long position. That just will be safer than currently trying to catch and just to gamble on what direction will market proceed action. But as I said, from the pure technical picture, this situation looks bullish in the short-term perspective, because picture itself just perfect. So it's, you can see it by yourself. So that's just like in the book. So example like in the book is just perfect picture of the possible reversal. It's the wedge pattern at free drive right at the support, and completion point of this butterfly is also just amazing. So from that standpoint, maybe it makes sense to take the risk and trying to take the long position, but that's, guys, I will put it on your own. So think by yourself. My position, I do not like to trade on the data release. Only if I have the regression model. Some time ago I tried to apply this, and we even have built a regression model based on the ADP report that has really big correlation with the non-farm payrolls releases, non-farm payrolls data. Well, if I have the regression model and I could forecast and foresee the possible data, in this case that's quite another question. But in the current situation, when we do not know what data will be really released, what number will be shown to the markets, I think that just will be safer to take the position after release, because my trading plan is to not trade on the data releases. If you vice versa trade on the data release, in this case the picture looks bullish. What will really happen, so only data will show.